are locked in to the Cash Flow Show with Dave and Nate, the best place to navigate how to achieve capital appreciation with commercial acquisitions. Here's your hosts, Dave Seymour and Nathan Amaral.
I do. I know I had a lot of these, but I didn't realize I had that many. This is an issue.
How many do you have?
1, 2, 3, 4, 5, 6, 7.
Okay, well, this isn't the addiction show, but if you want to tell us your problems,
dude,
I mean, you can do it.
I've got a problem. There's something wrong with me. Really weird. So I go. Are we live yet?
Oh yeah, we're live right here.
We're on.
Yeah,
okay.
we're on.
All right,
yeah,
good.
yeah.
Then I won't start swearing. So I go into I went to Staples this week, right?
Okay.
And as I'm walking through Staples, they've got like this this display.
Yeah.
Of like blue blocker glasses.
Oh, they still have those? Hey.
No, not blue blocker like the old silly blue blocker.
Oh, okay. All right.
I mean, like how you're not supposed to look at screens anymore.
Yeah,
unless you wear
the blue.
kind of glasses.
Yeah, the blue glasses.
So I go, well, that's great, but there are regular ones. And then I go around the corner where they got old fat reading glasses with blue blocker, and I'm like, boom, I'm in. So I doubled down. I go, I'm not a 1.25 anymore, so I go for the 1.5s.
Yeah.
So are you ready? Watch. Now watch. So that's the blue blocker pair. And I thought to myself, those are kind of nice. I like those. They're kind of blue.
Yeah.
And then I looked in my drawer and I realized, well, don't forget, I've still got this bracelet that I wear for certain other times. And if I don't like those ones, I can always go with my regular
Oh
reading
my
ones,
gosh.
they're not bad.
How
They're
many
only
pairs do you got?
1.25s. And then I got this pair that I got at BJ's a few. Well, I'm not finished, dude.
No way.
They're all in my drawer.
No
I went
way.
to BJ's and got a 3-pack of these ones. But then I found these ones because I
Oh
watched an old movie one time and like these 1950s ones. They're my faves.
That's
they're
like
from
7 already.
Like Mad Men. Hold on a minute. You think I'm finished? No. I got another pair.
Oh
right
my
here.
goodness.
Is there something wrong with
That's
me?
like 7 pairs. Oh, wait, there's got it. What is it? Do you like it because it's a different style? It makes you look smarter? I mean, what is it?
No, it's like, I don't know.
What
I'm
is
just
it?
not happy with my face anymore. And I want a new face.
I want a new face.
You know what I mean? Like Mary Beth said, grow some face.
Yeah, you got some.
I'm not a beard guy. I know.
I've
like
never.
You,
I've never.
You
seen
could do it. You're like dusky. You're like European.
Dusky?
You know what I mean? Like that.
What is dusky?
Yeah, dusky.
Like the
like
color.
that Greek and Portuguese and Italian.
Yeah.
I'm a lily white. Half German.
I've never
English,
seen you
something.
with a beard. I've never seen you with a beard.
Well, I don't know if I can grow.
Well, you got something going on there.
Right? Yeah, that's just dirt.
That's like 7 pairs of glasses, though. I only have 1.
And I've got probably another 10 or 15 pairs at home as well.
What? Oh, that sounds like a problem.
Something wrong with me.
That
I don't know
sounds
what
like,
it is.
yeah. They have a hotline for that. There's a hotline
You can,
for it.
but I know how to get over the booze. I'm sober almost 31 years. Now I just got to stop buying reading glasses.
Gosh, what are you gonna do?
Lego sets. I just bought another Lego set.
Oh, a Lego set. What, you building?
Oh, yeah. What are you pulling faces for? Don't ever pull a face at a Lego set, ever.
All right, wait, hold on. You're doing it with your kids. Is that what's going on? You're doing it with your sons or something?
No, this is my Lego set. It's my grown-up one.
Your grown-up what? What?
Grown-up Lego sets. Yeah. Oh, yeah, Batwing. 2,500 pieces.
What is that about?
I got all upset because she bought it for me for Christmas, and then I saw it in the catalog, and I said, I'm going to buy that, and she got all bummed out because she thought it was a great Christmas present. So.
Oh, there you go.
Anyway.
Wait here. Just do it. Welcome. Are you done? Are you done yet?
Nate,
yeah, you change your glasses. Welcome everyone to the Cash Flow Show. So good to. What?
You tell me which ones you like best.
All right. I'll tell you. I actually no, not that one.
Huh?
No.
Not the blue block.
And everybody else who's watching, let's vote. We could all vote in the comments which one we like best.
Brown?
No. Yeah, those are kind of cool. I like those.
But wait a minute, I got black with the blue arms though. What about those
arms? Those are either one. I would steal one of those from you. Like I would just take it. Yeah.
These are my Ray-Bans. These are expensive.
Oh, I love Ray-Bans. Those are nice. See, I like those. That's kind of I got like a little
go with the Ray-Bans.
tin
as soon
of
as
those.
you like them. Because it's only you who's even like share an opinion. Nobody else really gives a crap about my glasses or me. They just want to know how they're doing.
Oh, so true.
do the thing.
Welcome everyone to the Cash Flow Show. These are your hosts, Dave Seymour and Nathan Amaral. This is the show where we educate you and let you know about some great commercial opportunities and deals that are in the marketplace. We also talk about some pretty crazy and scary stuff. So goes our title of Pop Goes the Weasel.
How on earth did you come up with that?
Pop Goes the Weasel.
Out of your tree.
Let me say, the only thing I'm hearing about Pop and Goes of the Weasel right now is this stock market is just really nasty today. I mean, just the market, but not even just today. It's been the past few days. Everything's been crashing.
It's chaotic, man. So I was up at 4 this morning. Yeah. And I do my thing in the morning.
Yeah.
And
you got to do your thing.
I throw on my meditation, a little reading, looking after me time when there's nobody else around. But I catch up with a couple of things. There was Squawk Box. I like to.
Oh yeah, the Squawk Box.
I kind of follow those. I was actually on that show once.
Yeah.
Way back, which was kind of fun to be in studio with Andrew and Becky and Joe. But anyway.
That was what, NBC or CNBC? I don't know the network. CNBC, right? Yeah.
CNBC. Yeah. So we're on there. I'm watching those guys, and then I'm flicking through LinkedIn, and there was an article in there from Diana Orlick, who is the real estate pundit, for want of a better term, for CBS? Peacock, right? CBS? Yeah.
NBC, Peacock.
Yeah, NBC. Sorry.
Yeah.
And she wrote an article like, is this it? Is it the top? Is it the bubble? And what's incredibly concerning to me on a very serious note, Nate, is that it looks like there's a parallel that's about to go in both the stock market, because it's all based off of tech stock. Tech stock is imaginary value.
Yeah.
And combined with the real estate market, the single family marketplace. And these things are maxed. And I'll give you a perfect example.
Yeah.
A house very close to me went for 900 and I think it was $15,000 or $920,000.
List price?
What's that?
List price?
Yeah, list. Yeah, it was right at list or right over. But I'd seen the pictures on this on the MLS.
Yeah.
And I'd seen the pictures on it on MLS. And, as a house flipper, I knew it probably needed to bring it up to market standard about maybe a buck and a half, maybe another 150, because it was a pretty substantial house.
Okay.
And, I've driven past this place a few times going to and from the office. And I see them working, man. I see the old kitchens coming out. I see new kitchens going in.
All right.
I see a new appliance packages.
Okay.
I know what they're doing in there. They're doing exactly what I would have done. So now they're into this thing probably for $1 million, $1.2 million. And in my town, $1 million is it's like a unicorn. You know what I mean?
Okay.
It's like $1 million in that town.
Yeah.
Like, we've kind of bumped underneath $1 million.
Okay.
For quite a while, on and off.
Right.
Unless it's a complete and utter, McMansion.
Sure.
Oh, but under 5,000 square feet, it just is unheard of. So, micro, macro markets. So the micro market, my experience driving around in my town, my neighborhood here on the North Shore of Boston.
Yeah.
I know we're capped, we're maxed. Why on earth, right? Because the BS is out there. They'll tell us every single day, right? Yet the single family home is your biggest asset.
Yeah.
We both know it's not maybe our asset, it might be the bank's asset.
Right.
But even if you did believe it was an asset, why on earth would you buy it with practically zero upside potential? Unless you paid cash for it and you're just parking cash there at a negative yield, right? Why are people doing it? And so, pop goes the weasel. This bubble in both the residential single family market and the stock market. I think it's going to be a double pop. And,
so you're
COVID and the other bad news we've talked about. I mean, I don't know. What do you think?
So
am I just talking out of my butt?
Well, I just want to make it clear also. So you're saying that the housing market and the stock market are both going to tank, or the housing market's going to follow the stock market right now.
No, man, they're parallel with each other. They're both chugging along without any, without any fundamentals underneath it. I think here's the one thing I would say. All right, in if there's a defense to it, is the fact that the Federal Reserve has kept interest rates so ridiculously low that the buying opportunity is there.
Yeah, I think,
so.
And that's actually
is it really a motivated buyer and a huge amount of buyers in the marketplace, or is it just opportunistic because of the low interest rates? I mean, I'm not that smart to break all of that down, but.
Well, from my research, and I'll touch on that just a bit. From my research back after the last recession, right, we saw people who just went a lot of foreclosures, right, huge amount. And it put people into this saving frenzy. And there was a point that the World Bank actually came out with the stats, then they said, hey, the United States market, they're on the highest amount they've ever saved. So what you had was a very unique situation a few years ago. You had a bunch, the Americans were saving a bunch of money in their savings accounts. They had just a bunch of pile of money saved. But the buying still wasn't happening. Now that we're seeing the interest rates, tick lower and lower almost every week or on a monthly basis pretty much, we're seeing this buying frenzy come in. And it hasn't been these 100% or 103%, no down payment loans. It's just people putting down now their savings that they've had over the years. I think that's what's really spurred the buying frenzy that's been taking place. However, due to COVID and what we're seeing with, the forbearance happening, as well as, the upcoming foreclosures that is going to hit the market. I think, just economically, the jobs, like we're having this huge transition because we have people going to remote work. We have a lot of people losing their jobs, and the whole dynamic of where are these jobs going to come from. There's a lot of dynamic there. I think there's going to be a lot of change, not just because of COVID, but because of what's taking place in the marketplace, not just from, from like banking and from interest rates, but from job placement, job replacement, and where jobs are going.
Well, the underlining is always as well, right? It's consumer confidence, right?
Yeah.
Consumer confidence, a consumer index, they call it, I think, right? And you start breaking down, are you confident enough to spend capital? And this Christmas season, we'll see it.
It's very true.
Bezos was saying that this is going to be the Christmas season to beat all Christmas seasons, because we're pretty much still, staying indoors, to a bigger extent. The malls, the strip malls, the retail commercial is still getting brutalized and beaten up on a daily basis. Leisure, restaurants. We got a restaurant here in Middleton, Massachusetts, called Angelina's.
Okay.
And it's almost like a function place, a function hall.
Yeah, like events and stuff.
Been there like 30 years.
It's gone.
They're done at the end of the year. I just heard this one on the radio.
Right. So that's
crazy. And now it's such a fantastic location. There's developers immediately trying to swoop in and start talking about maybe taking this site over to build whatever, right?
Right.
The guy on the radio said maybe they'll build a strip mall, and I nearly crashed my truck when I heard him say that. I'm like, yeah, if you want to lose your shirt, right?
Right.
And then the next guy says, I'll build condos, and I'm like, yeah, if you want to lose your shirt. What you're going to need to do? You're going to need to build affordable housing.
Right. Well, it's funny you mentioned that about affordable housing, because that's something I literally brought up this past Wednesday. I was on a podcast, and I said, I think the next opportunity, the next wave of opportunity is, yes, foreclosures, but also affordable housing. I think a lot of people are going to miss out on this little niche here, but people need it. There's going to be a huge wave of a need of affordable housing. And that's what's happening out of all these businesses closing, out of a lot of job displacement. People at the end of the day are going to look at, where are the jobs? Where are people going? Where are the jobs? And now because of COVID and people have been locked up, I don't mean in prison, but people are being locked up or locked down. I think people are willing to travel and relocate a lot more than they ever have. And we've seen people from New York, we've seen people from California move to different states like Florida, like Texas, or maybe in the warmer states. And I'm sure you've probably seen a lot of that too, right? You probably seen.
Yeah.
people
You know what?
migrate to the south.
It's a nice little segue because if you pull up the deal of the week, it actually ties in with what you're talking about. I didn't prepare better. I got to pull it up on
Okay.
my own desktop here. Let me know when you've got it up on your screen.
Yeah, let me know where I put it. Where did it go? It just disappeared.
Oh, you can't lose the deal of the week. It was a beauty.
I just lost the deal of the week.
You lost the deal of the week, 75 units.
I had it open a minute ago. Hold on a second.
Come on, man. You're the computer guy.
I
I'd expect
know.
me to
I
lose
know.
it.
And it was just like right here.
Let me know when you got it back up again.
Yeah.
I'll sing while you're doing that. I'm forever blowing bubbles. Chelsea bubbles in the air.
I don't understand.
Did you lose it, buddy?
No, I
People don't want
literally.
to sing it.
Well, I wouldn't say that. I mean, some people would like to hear you sing. Okay, here it is.
It's a PDF. You got it, big boy?
Yeah, I
Big
got
boy.
it. 75 units, right?
Yeah.
Gotcha.
So the folks can see this one on the screen.
Yep.
It's interesting. So as you know, most of you listening to this show that we do weekly with Nate and myself, we are investing heavily in apartment complexes in the Gulf Coast region of Florida. And this is a deal that Walter had underwritten last week. We love this one. We're excited to put it on deck and bring it into the fund. But there's some really important information just inside the description that you can see there. And I'm just going to go through it. So it's prime residential location, which is obviously nice for us. You're in a good neighborhood. Right?
Yeah.
Location still works for us at this level. Easy access to Orlando, Disney, and Universal. Now, when you make that kind of a statement, and you say that it's advantageous to be within walking distance to Disney and Universal and Orlando, the little voice in the background's going, "What are you, crazy? Nobody's going to Mickey Mouse Land anymore. They just laid off. Their stock is down. Blah 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 blah."
Right.
Now here's where the intelligence comes in. Is there a strategy to ride this wave? Because I promise you, 4 or 5 years from now, it's going to be packed again, right? Everybody's going to want to go back to Disneyland.
True.
So how can you be in this marketplace and be prepared for that upside later on? So look, it also provides easy access to the Route 4 corridor, which is important to us, Tampa Bay area, Daytona Beach. So it's nice and centrally located, 4 major shopping and entertainment zones. Again, shopping and entertainment, why is that a positive? Well, it might not be a positive today, but it will be 4 or 5 years down the line, right?
Yeah.
So this is why this one works, right? Entertainment zones are within a 5-mile radius of the project and several major employment centers, including Amazon's newest fulfillment center, which is located within 10 minutes from where this location is.
That's huge.
So there it is. There's the resolution to
a lot of
potential
those
problem.
And a lot of those are popping up everywhere.
Even if it wasn't there, it's still a pent-up demand in the Floridian market because of the amount of retirees that go down there that generate approximately 4 jobs per retiree, right? We're still getting the hell out of Boston. There's snow outside my window. I can't take it already. I'm only 54 and my bones are aching. So this one was completed in 99, consists of 75 two-story townhomes situated in a 13-building, 6-acre site. 2-bedroom, 2-bath. It's ticking all the boxes for us. The current owner did do the major improvements and upgrades in 2016, new cabinetry, tile flooring. They also brought it up to the Tampa Hurricane Code, which is important to us. So we're going to buy this one for $6.25 million. The community is lacking amenities. So this is a bring it up to parallel what is around it. Okay, so it's got its deficit in its facilities, and as you know, in Florida, facilities are important. They want the nicer pools, they want the office space. The factor of the lack of facilities combined with substandard management. Check this out, Nate. 11% vacancy rate in a pent-up demand market. Which is ridiculous.
So
that's free to us.
Right, and the way I see that is if you have that much vacancy, are some of the units like empty, or they need to be remodeled or something like that?
Yeah. So we can do some cure while we're there. So we can cure the deficiency. We're going to put $500,000 into the improvements and the amenities there, improve the demand while also moving the units up to a higher rental level. Now, this is important. For anybody who considers investing with us, you've got to understand the methodology of how we buy these assets and how we reposition them. We don't buy an asset to raise above market rent. Never, ever do that, because that's gambling. I hope I can get more than the market demands. However, when you've got a deficiency and you've got a below market rent, that's when we have the opportunity for the Core Plus, do the repairs, the amenities, the light rehab, and bring them up to parallel or comparable market rate. And that's always a huge value add. The improvements will include a resort style pool and deck, grilling area, nice sun deck, landscaping, hardscape. Improvements combined with the installation of our management team. What that'll do is it just puts it in a much better position. Once we get our managers in there, we get the underperforming managers, as Walter calls them. I just call them crappy managers. He's a lot more diplomatic at times than I am. So we get our superior teams in there. Numbers on this one: first year, we're targeting a 12.88, just short of a 13% quarterly distribution, cash on cash. As we continue to reposition and work the asset, execute on the business plan year 5, we expect to be at a targeted 15.5%. Now, the internal rate of return on this is nice. It's a 23.22. So again, the IRR means the value of your money working over time as an investor. Yeah. So that's a 23.2%. And then the equity multiple is, double your money plus 20 cents, right? That's what an equity multiple is. Your equity is the money you put in, and then how many times does it multiply during the course of the life of the investment. So double your money in 5 or 6 years plus an additional, 0.2 overall. So, to our point around, employment, it's knowing and doing that research. A lot of people, Nate, they think that, you just buy an apartment complex, or you just buy a 3-family, or you just buy a 12 unit, or you buy one of those really nice 24s down in New Bedford. Yeah. Yeah. In your neck of the woods, and everything's fine. Yeah. And it doesn't
work that way. Yeah. Obviously. Yeah, obviously. Yeah. But another great point to bring up, especially what's been happening like this past week in comparison to the stock market. A lot of people are familiar with investing in their 401ks or investing in the stock market. Maybe they're day trading or whatever it is, or maybe they're just playing the Bitcoin game, whatever it may be. That's up and down, a lot of volatility. Yeah. But this is a good comparison. You see the declines that's been happening in the primary markets, where it's consistent declines, unpredictability. But then here you are bringing target returns of anywhere between, 12.8, high as 15, 16 that we've seen here on the show. And that just shows security. It shows that this is a path that you have more control and confidence and security around, rather than such volatility. And
you're so, look, dude, it's almost like, and I got to keep it real all the time. Yeah. Because it's almost like you and I talk as if, it's some kind of miraculous discovery that we've had in our careers. Yeah. This isn't new, Nathan.
It's not rocket science.
Right? It's like for the folks that listen to us and begin to explore these investment opportunities, we're not reinventing a wheel, but what we are doing is dropping the barrier to entry that most Americans have had to be a part of this elite group.
Let's stop right there. You brought up a really great point. Let's talk about barrier to entry for a second. And so everybody who's listening, imagine yourself driving down a road, and you got not a highway, but some busy, route or whatever they call those other roads, right? You're driving down, you see this big, sign that says something, what do you call them? Like Lakewood or River Estates and whatever, and inside
Swan Valley Apartments.
Swan Valley Apartments, right? Yeah, Swan Valley. Let's call them Swan Valley. And you see this apartment complex, and as you're looking at it, you're like, wow, Who owns that? I mean, if you have ever thought that thought before, let us know in the comments, because this is what Dave's talking about barrier to entry, is if you've had that thought of who owns that building, who owns all those apartments, this is the kind of opportunity that you can have now and saying, well, hey, I'm part owner. This is your opportunity to say, I own a piece of that, right? That's the beauty about what you're talking about. And years ago, that would almost be unthinkable to most people. Most people would think, oh, I need like $5 million. I need $6.2 million to make that happen. I don't have the education. I don't have the knowledge. I don't know the connections. And all that becomes possible with partnership. All that becomes possible with partnership. And that's the most important part that I want people to realize about this.
It's the three-part process, right? Why haven't you, Mr. or Mrs. Potential owner of large apartment? And look, with us, Nathan, it's not a complex, it's complexes.
Complexes, yeah, multiple.
Right? It's a piece of all of them. But there's really only three things that have always been the barrier to entry. And it's time, which is, it's the one resource that we can never duplicate or get back. Then it's the second one, which is knowledge, which is unfortunately attached to time, because if you don't have the time to learn it all, you're never going to have the knowledge to be an expert.
Right.
And then the third one is always Ben Franklin. It's capital. It's green to get in there.
Right.
And it's been such an elite investment in the past because the endowments, the Harvard endowment, Yale endowment. I just read recently that they're doubling down on their commercial asset acquisitions.
Very true.
They're looking for more and more opportunities.
It's very true.
It's been an elite group that have been able to buy these things, and it's only through a congregation of educated operators, which is what we are, right? Myself and Walter and Eric and you yourself as well. Experienced operators with proven track records, with systems, with the verticals to manage, the verticals to do construction and repairs and tenant law, et cetera, et cetera, et cetera.
Yeah.
And by the way, take all of the liability off of the investor and put it all on us.
Yeah.
Which is always a huge benefit.
That's a huge reliever.
So you've got the time, the knowledge, and the capital. So when we put the fund together, that barrier to entry has now been removed. Okay?
Yeah.
All it takes is your time to learn about us as fund managers and our methodology and what we do. A couple hours, right? Knowledge, I don't want you to learn everything. I just want you to learn enough so that you can have intelligent conversations around the investments.
Yeah.
I've been doing this for 12 years. Walter's been doing this for 30 years. Eric's been in this game for 5 years plus. We've done the groundwork.
Yeah.
You know what I'm saying?
Right.
Like we've put the feet on the street. So you're never going to have our knowledge base unless you're 20 years old and you start now.
Yeah.
And then access to capital. Yeah, we write checks to buy these kinds of assets, $5-10 million at a time sometimes. We're always turning capital over, and an investor comes in with a smaller investment into this fund, and they get to participate in the upside.
Well, yeah,
so it's a win-win-win.
Brings up another point there where you say, if someone only has so much capital, some people may only have, 100,000, 300,000, whatever, 500,000, whatever their amount is, and they say, oh, I'd really like to go get into that game. I'd love to be in real estate. I'd love to start investing, but I only have $100,000. I only have so much. Well, That's the beauty about what the fund is about. That's the beauty. It's like now, because someone may be limited in connections. They may be, whatever they're doing full time in their life. Maybe they're a developer. Maybe they're an accountant, whatever it may be. But their sphere, their connections are only so limited to their friends and colleagues. But in partnership, in working with you guys in the fund, that's the beauty about it, because now you're bringing the connections together. It's a joint effort. It's working together to take down the properties.
Yeah, we're strong on the community piece.
Yeah,
we really are. Right. It's a business relationship.
Right.
It really is. We're in business together. Right. We'll do all the work, all of it. We'll do everything. You don't have to do anything other than move money.
Yeah.
All right. go through the subscription documents, move capital either out of retirement accounts. We got a psychiatrist. No, I'm sorry. Yes, medical professional. Can't remember. But anyway, they have an appointment this afternoon with one of our team members. They'll be on the phone for about a half an hour. They'll walk through the process of, liquidating some stock asset and then moving that into the fund so that it can work at velocity, right?
Yeah.
How hard is your money working? A friend of mine said to me one time, he said, "What's the definition of lazy money?" And I went, "Well, what do you mean by lazy money?" He said, "Lazy money, money that's not working."
Yeah.
And I thought to myself, well, and this was early in my career, Nate,
Yeah.
but it always stuck with me. He said, "How much do you owe on your house?" I don't know what it was, maybe 200 grand. He said, "What's your house worth?" I said, "I don't know, maybe 500. He said, "There's 300,000 lazy soldiers sitting down, picking their nose and scratching their ass right now."
Yeah.
He said, "Can you figure out how to get them out of there? Let them go to war. Let them go to work. Let them go do what they're designed to do. Because money is a tool.
Exactly.
It doesn't even mean anything. It doesn't even have any value. It's just a tool."
Yeah.
Right?
Exactly.
So, lazy money, identify. I'll put that question out to our listeners. See if you can identify 2 places where you have access to lazy capital. Right?
Yeah. Where is your lazy capital?
I'll give you one. Equity in a residence.
Yeah.
There's one.
That's one.
I'll let you figure them out.
Well, one I can think of. One, yes. They still have those?
What are they called again?
Certificates of deposit.
No, certificates of death. That's what.
Oh, that's a better word for it, for sure.
Where money goes to die.
That's so true. Yeah. That's so true. I think most people, we've seen in recent years, most people, a lot of people have money sometimes just sitting in a checking account and they're excited about 1%. If they're getting what some of these newer banks, are coming out, maybe 0.5, 1%. You can't get excited about 1%. You can't. That's not
There's
excitement.
There's a commercial out there right now. It's Capital One, right? Capital One Bank.
Yeah.
So Capital One Bank, they got the guy in the suit and he's in like a cartoon background and he says, breaking the history of banking. Open up a Capital One, right? Go open up a Capital One bank account with us.
Yeah.
And then they say, the interest that we pay on your deposits is 3 times the national average. That's his selling feature. But there isn't one person out there who says, well, what's the national average? 0.1 kiss my rear end is what the national average is. So Capital Bank, in their wisdom, decides to offer 3 times the national average, which is 0.3%, right?
Oh, my goodness.
3 times 0.1, if that's the national average. So, when I start to see lazy money, Kevin from Shark Tank, he says all the time, we have a responsibility to not kill money.
Right.
And, I take that responsibility. We have a little humor with it, Nate, but it ain't funny. It ain't funny to watch money dying and retirement accounts shrinking.
Right.
And people not being able to outlive their money.
And a lot of the reason why that happens, especially on weeks like this week, today, with the stock market doing, is people are gripped in fear. They're like, oh, let me hold on.
You see what they're doing in Europe? They're talking about putting breakers out on European trading.
Absolutely. They're just in talks. I think it was yesterday or maybe early this morning about they have to bail out Italy again. These kinds of things that are happening, it can send anybody in a panic or in a deep state of worry. But the reality is that's because they're investing in, the economy, in companies, most of them. Sure. And the reality is that is so frazzled right now. Whereas if they were invested in real estate and they were in real estate where people are always going to need a place to stay, then they would be a little bit more secure. They'd have a lot more ease, less stress. But that needs to come with making that decision. They need to switch. They need to change.
Look, like I said, Nathan, we're not reinventing the wheel.
Right.
And there's a couple of just thought processes that have been so ingrained in the front of my mind these past couple of weeks. Commercial real estate, apartment house investing, right? It has the risk profile of the bond market.
Yeah.
Okay? That's what it has.
Yeah.
And with a negative yield, right? It doesn't get much safer than that.
Exactly.
Like, you're only going to lose a little bit of your principal because it doesn't even pay a return. And yet it has the return expectation of the stock market plus,
Mm-hmm.
right?
Right.
Without the volatility. You know, the 1%, love them, hate them. You know, we use that term so frequently now. But the elite, the wealthiest of the wealthy, have consistently looked at this asset class, multifamily commercial, as a place to, listen to this, Nate, park wealth. Drive the money into the asset, you park it there, you leave it alone, and you let it grow for 5-6 years.
Yeah.
That's what they do.
Right.
That's what they do. That's why
Right.
they're moving the money.
Right.
That's why the certified financial planners, the CFPs, the professionals, the registered
Wealth
investment
management.
advisors,
Yeah.
they're calling us,
Right,
man.
right.
They're calling me now. They're like, my high net worth clients, my clients are looking for real estate.
Exactly.
What can I tell them?
Exactly.
Because, you know, majority of these financial guys and girls, they don't have this tool in their toolbox.
It's true.
You know, they didn't get it when they were regulated up the yin yang.
Yeah.
You know, to be able to bring this stuff to the marketplace. So anyway, that's how I look at this stuff, man. It's a huge opportunity.
Yeah.
And you know, those that sit on the sidelines are going to watch the opportunity go by.
And you know what? I know right now, especially, you know, the United States is up with an election. A lot of people can be stuck in
an
the
election.
A lot of people can feel like, oh, let me wait to see who gets, you know, elected. You know, a lot of people they realistically do that. They wait on sometimes buying a house, or they wait on where they're going to move their investments and all that stuff.
Yeah.
But the reality is, don't let that stop you from at least having a conversation, right? So someone can contact your office, start the conversation, and ask the questions that you have so that you can be more knowledgeable in this type of this strategy of wealth building, of wealth creation.
Here's the thing. Like, people are always, I'm just going to go 0 degrees. It's like, oh my God, I don't want to be sold anything. I'm not calling. You're going to sell me. So listen, I got nothing to sell you. There's nothing to buy over here.
Yeah.
You can't buy it.
Yeah.
But what you can do is educate yourself, elevate your intelligence in these alternative investments, and then you decide whether it's for you or not. Because the magic of this is real simple. This works whether you're in it or you ain't. This train's going down the track with or without you, whoever you may be, right? And, you know, that opportunity, 1 or 2 directions towards us or away from us, depending on the actions that we take in the moment that it arrives, well, that's always up to us, isn't it, you know? And, you know, I had a conversation with a lady a few years back, and it wasn't around the farm, but she's like, you're trying to sell me something. And I looked at her and I said, you know what? I'm trying to sell you some financial independence.
Yeah.
If you want it, great. If you don't, go be broke.
Yeah.
Right? You know, it's not. See, some people, as soon as there's resistance, Nathan, it's not for them. You know, if you're listening to the information that we put out, and you've got all the reasons why something won't work, then you're what we call a dig jam. Damn, I'm good, just ask me, right? They've got the answers for everything.
Yeah.
Their ideas are always better, right? That's the kind of person who will ask you a question, and then before you answer it, they start answering their own question because they just love to hear themselves talk.
Sure.
So, you know, this isn't about resistance. This has to be an education platform first.
True. Then
an invitation to the fund to sit down with one of our team and have a conversation. And I'll be very direct with you. A lot of our conversations, they're not a good fit. No, this isn't for you, but I want to give you my money. No, you can't. This isn't for you.
Right.
It's not a good fit.
It's true. It has to be a good fit.
You're going to be a pain in the butt, right? You don't understand. It's for maturity,
it's
Nathan.
True.
I have some fun with it, but it's maturity.
Yeah.
We're not, you know, we don't bring in $5,000 at a time. You know, it's an accredited investor with some financial intelligence. We bring them up the gradient as to what the investment asset class is all about. And then we just straight out execute. And then we're done. No more discussions. Now it's go time.
Yeah.
Putting the money to work. So, you know, it's, as I said, man, I don't want to get repetitive, but it's definitely a very interesting time.
Yeah.
I'm going to throw a quick shameless plug out there. Can I do that?
Yeah, of course.
Anyway. We still have a couple of seats, I believe, for the investor luncheon, which is coming up November the 7th.
Yep.
November the 7th. We have an investor luncheon scheduled at Polana's Steakhouse. Lunch is on me and the rest of the team here at Freedom Venture Investments. I just finished the outline for the event, and I'm excited, Nate. I will be bringing in my accounting team. My accounting team has worked with high net worth investors as well as regular investors throughout their career. They'll be Skyping into the event or Zooming into the event, so that there's open Q&A for the investors there to get some insight on the tax advantages of what we do and how we do it. I've also got Walter Novicki, obviously my investment officer. He'll be Skyping in from Fort Myers. And also Greg Helene. Greg Helene is the founder, and CEO of Horizon Trust, which is a fiduciary company, for want of a better term, that transacts self-directed retirement accounts and also solo 401ks. And we talk about how to engage retirement accounts to get some velocity to those golden years, which are around the corner for some of us. So real excited about having that. We'll rub elbows. That's all we're allowed to do. We're not allowed to hug and kiss anymore. But it's a COVID compliant environment. If you go to, I'm not sure if you still have that link. I actually
have the website up and running here. It's up.
Oh, you do?
Yeah.
Okay. So if you go to freedomventure.com and just look for anywhere to put in some information and make a comment or a notation, or you can call 781-922-4418. 781-922-4418. And if you scroll down the bottom of the screen, Nathan, just double check that's right.
It is, yeah, 781-922-4418. You can also email at info@freedomventure.com.
You could do that as well.
You
Good,
can.
yeah. Reach out, get a couple more butts in seats. And for any of our Floridian listeners, we will be at Bascom's Chop House in Fort Myers on November the 14th. That event is filling up fast. So same thing, call that phone number, reach out at info.freedomventure.com and just say, hey, I want a free steak dinner on David's. And we'll be more than happy to feed you, wine you, dine you, and give you the information that you need to make educated decisions around what's next. And look, with regard to the election, for us, we just adjust.
Yeah.
We just adjust.
That's
what
very
do we
true.
have control over and what do we not?
That's very true.
Red or blue, we're bullish on our business model. We've been through many cycles. We've been through many presidents.
That's true.
When I first came over, it was Ronnie Reagan.
Really? Was it?
Yeah, 1986.
Wow.
Yeah, Carter was on his way out. I don't know. I'm going to make myself sound. Yeah. And then it was William, Mr. Clinton.
Yeah.
I did not have any relations with that woman. So I've seen some politics come and go as well, and we're resilient. That's who we are. We're Americans first, so we get it done for sure.
Absolutely, good stuff. And hey, I think we're having an interview coming up real soon, right? We think we got that in the works, right? We bringing someone on board here?
Yeah. Are you coming on? Yeah, you coming on the radio show? Let's do it.
No, but you should also remind everybody about your radio show, but also here on the Cash Flow Show, where we have some special guests coming real soon. But also on your, do we? No,
I'll find something.
Yeah, we'll get something.
The guy on the corner over there, hold the Trump sign. He'll be good.
What about your radio show on Saturdays?
Yeah. Oh, that's right. Saturdays, 104.9 FM. Boston North Shore. There's actually an app out there, so you can listen live no matter where you are.
Nice.
This week is the interview that I did with Kevin Harrington, the original shark from Shark Tank.
All right.
Kevin's a cool guy, man. He breaks down exactly how he got into the info business, how he got into the gadgets and gizmo business, how he became the kind of like the originator of the infomercial, if you will. 500
billion
different products brought to market.
I thought you were going to say $1 billion of revenue.
He's done over $5 billion worth of business, though. Man.
He's done a bunch.
And what's cool about him is he talks about the wins and the losses. He talks about the fact that if you don't pick up the bat and swing it, you're never going to hit the frickin' ball.
That's
right?
so true.
Everybody's on the sideline with an opinion when a game's on, but did you pick up the bat? Did you at least try and play?
So true. Yeah.
So he's a cool guy. He's part of our business development team now, so it's exciting to have that motion behind us as well.
Awesome. Great. Good stuff. Looking forward to that. So guys, don't forget those dates and times, not only for the Polana's meetup and as well as the radio show. All right, Dave.
Yeah.
Until
See you, buddy.
next time, have a great weekend. See you
I'll
soon.
wear some different glasses.
Yeah, change them up this next time. I was wondering why they were always so different.
Yeah. See you.
All right,
buddy.
see ya.